Chris, thank you very much for joining us today. We are in Q3. There's a lot going on in the month of May. Companies are going to start releasing their Q2 numbers in earnest in the coming days and weeks. We also have the Republican National Convention coming up at the middle of the month. You never know what's going to happen there. We have a Fed meeting at the end of the month on July the 31st. So there's a lot of events which could take this market one way or the other. And I want to start with the S&P and the NASDAQ. They continue to make new highs every other day. The S&P's up 18% on the year. The NASDAQ's up 20%. And the last time you and I spoke in February, I can't believe it was that long ago, but your belief at that time was that the market would top out in May and then we were going to see a significant pullback. What are your views now on the broader indices?
Yeah, well, thanks for having me again on the show, James. Let me share my charts and I'll show you kind of what I'm seeing with the markets. So here we've got the SP 500. We'll just go back to the kind of weekly chart of the markets. This is the SPY. And the key here is to understand we've got, rising tide when you want to own equities, a falling tide when we don't want to own equities. And we are still in this major move up. When you and I talked, it looked like seasonality wise, we should be topping out sometime in May, June, or July. That's pretty much when the SP 500 starts to stall out. We're still in July. July is still that spot where it can. But no matter what, I think is going to happen, the key is we always follow the price charts. So I don't care if my opinion is wrong. The key is we need to follow the markets. And if we look at our trend trading charts, you can see we're long the markets. We recently hit a target on the SPY, which we're long. We're also long the NASDAQ. We've hit a target. We're very close to another target on the QQQ, the NASDAQ play. So even though I'm bearish, and this is where a lot of people get confused, James, is I have been calling a top for a long time. But just because I'm calling it doesn't mean you bet against the market. And I get comments and I see it in email and YouTube all the time and emails from people saying, you're bearish. I sold all my positions and the market keeps going up. Well, the key here is for people to understand we follow the charts, but what I'm sharing with you is what I think is going to unfold and to be mentally prepared. But to make money in this market, you still have to follow the trends. You can't bet against it. So we're long the markets. We own the SP 500, QQQ. We have some into BIL. We're long uranium stocks with URA. So we're also, holding here for, I think the market's going to have another push higher. I think we could have one more big squeeze to the upside. So it's pretty exciting.
And so when you say one more big squeeze to the upside, what would be your target on the S&P?
Yeah, if we were to look at the SP 500, I don't think I say big squeeze, but let's just use a Fibonacci extension, get an idea. If we were to just look at this move, we would be looking somewhere around 58, 52, 58, 58, which percentage wise, I mean, it's not a huge move. Let me just grab a measure tool here. So we're looking at only 2.5%, maybe 3% to the upside. So it's not huge, but it's definitely a nice push higher. The NASDAQ will probably go higher percentage wise. And then hopefully, or maybe we'll start to see the market top out. But right now you got to be long the equities market. When we look at the SP 500 futures chart, this is the 30-minute chart here. We have gone from an oversold condition, this little lime green section down here. And usually when we get these lime green sections, the market will rip to the upside. And that's what we've seen. And now the market is actually flirting with an overbought territory. We have FOMO today, meaning the shorts are starting to cover. Everybody's now piling in. And we go from these oversold conditions to an overbought condition. So I am expecting we're going to see the market have a little bit of a pause or pullback. This has been a very nice run. The SQQQ, I actually was showing subscribers last night talking about how there was on the, I don't have the intraday chart here. The intraday chart of this is really interesting because we're starting to see the shorts get squeezed out. Yesterday into the close, there's almost 10 million shares traded on this. And this is the triple leverage inverse ETF, people picking a top in the markets. They got squeezed out and now we have more shorts getting squeezed today. And that's what this panic buying indicator is. It's a wave of people covering and buying shares on the New York Stock Exchange. And whenever we get above this little blue line, this reading of 3, the market tends to have a little bit of a pause or pull back the equities market. So it's interesting, all these things kind of unfolding.
Yes, it is. And you mentioned about FOMO, and I'll tell you, What's going on right now is incredible. I want to bring up Apple. Do you mind pulling up the chart on Apple? And
Sure.
I'm mentioning in this because it was flat on the year. And then on June the 10th, they came out with their AI strategy. That was one of the things holding it back. It had no AI strategy. And
Yep.
now it's up 25% of the on the year.
Yeah. I mean, Apple, oh man, I've been waiting. I mean, Siri is the worst. It's so bad. I've been saying if Apple does if their AI doesn't blow this world away, they're in for a world of hurt because they have to over deliver. And if I don't know what their new AI stuff is, but now that they're implementing it and I'm pretty excited because they should be leading the way. And they have been holding off, dragging their feet, and I'm hoping it's because they have something that's going to knock the socks off people. I don't know anything about it, to be honest, but it's definitely got investors excited because they're the biggest company and now they're implementing AI, which obviously everybody seems to love.
And the other name I want to take a look at is Tesla. That was another stock. It was down on the year, and then they just came out with their Q2 deliveries,
Mhm.
and it was a massive beat. The stock is up 40% since the announcement, and it's only up 5% on the year, but it was down quite a bit before this
Yeah.
announcement. But what's your take on Tesla? Where do you see this one going?
Yeah, I mean, I think I think Tesla's got a lot of potential still, especially when it comes to, their whole Android or their humanoid robots, right? I think there's so much potential. So they've got kind of the team, they got everything in place. I think that's kind of probably also playing into this. I mean, this kind of all sparked, I think, a lot when I saw Elon talking about how, 1 billion of these robots a year is really, nothing. It's we're going to be able to do that no problem. I mean, if they could produce them, there's going to be lots of demand. I think that as also part of it. When I heard him talking about it, it actually got me very excited about Tesla in general. Not so much about the deliveries. I actually didn't really care too much about deliveries, but to me, it's more so, holy, they got a whole new division that is going to be like, massive. And it'll be, yeah, I think people are moving into it because of the AI space again. I mean, it is kind of an AI play.
Yeah, one thing for sure, you never bet against Elon Musk. And I think this, given this move that we've seen just in the last week to 2 weeks,
Yeah.
there must have been a huge short position in the name because
Mhm.
it's just a beast. It just keeps going.
Yep. Yeah.
And so one other name I got to bring up, we got to take a look at is Nvidia. Okay, it's the king of AI. It's up 170% year to date. Market cap's over $3 trillion, which is hard to believe, but 2 trillion of that came just in the last 6 or 7 months.
Yep.
What do you think of this stock? Do you see any weakness at all, or is it just going to keep going?
It's definitely lost some of its momentum. I mean, whenever we keep seeing the stock market go make new highs in the past, Nvidia has always been leading the way. This time, the markets are making new highs, but Nvidia is not. I kind of feel like, we had a very big run right here, and then it consolidated. It took a big pause. This kind of little sideways move, and then kind of squeeze up to a high, and then faded back for a kind of a bigger cleansing event. I think we have something very similar in terms of we're having the same move. This might take a bit of a breather. Just looking at this chart from a technical kind of chart standpoint, this is a big run, a multi-month flag, a huge run. I think we could see a multi-month flag. It still is pointing to higher pricing. Short term, it has a little bit of a bearish bias simply because it's gapped higher a couple times up into this range and then sold down. But overall, I mean, a pause here or a slight pullback is actually a bullish thing. The more it stair steps its way up, the more likely it is to be able to hold that value. If it was to just skyrocket up here and shoot up to 200, say, it's more likely to have a very sharp correction. So overall, I like it, but it's definitely lost a bit of its initial mojo around leading the market, and now it's kind of flagging out. I think investors have, they're just taking a break. There's a lot of profit taking going on, I think, in Nvidia.
When I look at the broader indices like S&P and the Nasdaq, I think the one thing that really stands out to me is that it doesn't matter what's happening in the world. Geopolitics, war, rate cuts or no rate cuts, the market just keeps going higher. And then there's all sorts of uncertainty associated with both the RNC and the DNC and who's going to be running for the respective parties. But the market just keeps grinding higher. But yet you think it's going to top out around 5,800, which is not too far away. And why did you come up with that number? And why can't it go to 6,000 or maybe 6,500 by the year end?
I mean, all I did was take this short-term rally. So this rally up, then there's a bull flag, and using Fibonacci extension based on that strength and the amount of pullback, it allows us to project forward how much momentum is in that play. And so carrying that forward brings us up to that 58 level. Now we could go back and let's just clear this chart a bit. Let's go back and look at potentially the big picture. If as you mentioned, the market can do whatever it wants, and it will. But here's the first major run up. So from these lows all the way to the high, and then here's a major pullback. We could go back and take a look and say, hey, this right now it's at the 618. Typically, if we hit this 618 level and have a bit of a pause, which the market right now, based on our FOMO indicator, our money flows, it's telling us we should see the market stall here for a few days. If it stalls here, then we have a very good chance of it running up to about 61.58, which is obviously a lot higher. We're looking at a 7-8% move to the upside, which would simply complete this initial move, this big rally up. This could pull back, and then we'd have this 100% measured move back up to that almost 6,200 level. So there's lots of upside potential still. We just don't know when it's going to top out. The key is making sure you have a strategy in place so that when it starts to top out, you're able to lock in profits. You're able to, take advantage of the pullback and not just kind of, hold on to a position and ride it down. Eventually, one of these pullbacks will be a big one. But until then, again, we just follow the analysis, follow the trends, the money flows. And if it's still trending higher, I mean, I'd love to see it go up to 6,200. I don't really care what it does because we follow trends. So it's not about trying to pick a top. It's really about trying to pull money out of the market without taking on big risk. And that's what I focus on. And I love the ETFs, as you mentioned, James. They just want to keep going higher. We have been in this environment where it's the best play to me has been the index trades. You simply buy it. Getting into sectors, they are all over the place. Like I've got our hot list over here. The top sectors are the ones that are outperforming and leading the way. And then we got the dogs down below. But they have been jumping around really since February of 2021. For example, gold miners and silver miners are up near the top right now. They were up at the top about a month and a half ago. Then they went to the bottom as the worst performers, and now they're back up to the top. And all these sectors have been doing that. They're all over the place, making it very difficult for anybody who's trying to pick sectors to trade, anyone who's trying to pick stocks to trade. You're better just to ride the ocean tide right now. In a brand new raging bull market in 2025 or 2026, when I think it'll happen, then you can get into stocks and it'll be unbelievable. But right now, it's just easier. If the tide is going up, ride the tide and higher. And then when it rolls over, we'll play the downward move. Playing individual stocks has definitely been a tough game for several years already. And it's going to be tough for, I think, another year or two.
So when you say the S&P could go to 5,800 or even 6,200, and then that's going to be followed by a significant pullback. Can you quantify that pullback? Where would you see it going? Let's just say it gets up to 5,800. Where would you see it going on the downside?
Yeah, I mean, we could, it'll be interesting to see what type of topping pattern it forms, because a lot of times you can, based on the topping pattern, you can take that measurement and flip it to the downside for the initial move. But if we were to just look at this 5,800, as you mentioned, we can use Fibonacci retracement. We can use a couple different levels. So based on that shorter term move, we would take the low that we measured that target from, and we'll go up to 58 area. So if it was to run up to 58, it might pull back down to only 56, 55, 30, somewhere in this range, a 38% retracement to 50% retracement. Now, in the bigger picture, if we were to look at this bigger move, and it goes up to say the 6,200 mark, then it's a very different picture. Then we're looking at it coming down to the 5,400, potentially 51. I mean, these are just measured move pullbacks. That'll happen in a bull market type of phase that we're in. That would be a normal pullback. I believe if we go into like a stage 4, market correction, a recession, I believe the stock market is going to get a whole lot uglier, and it'll probably break these lows that we saw, back in 2022. So I believe things will get very, very ugly at some point. But on a short-term basis, these pullbacks, aren't that severe at this point.
And so any sort of pullback, you think at this time it should be bought?
It's tough. Yeah. I mean, if the trend is up, yeah, that's how it is. I mean, we're long the markets. I'm expecting them to go higher. At some point, they're going to start to reverse and roll over. But yeah, the market is trending higher, and it's showing signs that we are definitely like late stages. We got gold near all-time highs. We got industrials. We've got energy stocks. All those things are telling us, we're very close to an end, but it doesn't mean you pick a top. This market, as I said, can still run 8% within safe boundaries of what the previous chart patterns have been showing. So yeah.
So you were talking about the various sectors and how tough it is to trade the sectors. And one of the sectors that really surprises me are the US financials, more specifically the big cap banks. Citibank is currently up 30% on the year. JP Morgan is up 20%. Wells Fargo is up 20. So all of which are outperforming the S&P at this point. But yet the regionals, we've had a lot of troubles with the regionals here in the last couple of years. And I'm surprised at how well the big caps are doing, given all this talk about a slowdown in the economy and a possible recession. What are your thoughts on these big cap banks?
I kind of feel like, I mean, I don't know the space very well, but I feel like the big caps, not like this is the regionals, they're underperforming. I think the big caps probably have a lot more support from the government and the Fed when, the brown stuff hits the fan. So I got a feeling they'll be somewhat protected a little bit more. The regional banks, they're tiny. They can blow up and go bankrupt, I think, a lot easier. And I think that's why they're probably struggling. They just don't have the same, I think, protection or support potentially from the government. And they're going to be, I think if we have a big correction in the markets, and I think real estate is slowly headed that way, then the regional banks are going to be caught with a lot of mortgages not getting paid, probably a lot of credit card debt not getting paid. And they're going to be backwards on mortgages, homes that are less valued than what's on paper. And I think they just have more, I wouldn't say they have more exposure. I just say they're more sensitive to losses, is kind of the way I see it.
Yes, I recently had an interview with David Rosenberg. He thinks the US is heading into a recession if it's not already there. Danielle DiMartino, she thinks we are in a recession. So once again, I'm really surprised at the strength of these US financials. Now, you mentioned about gold. And so why don't we look at gold right now and get your thoughts on that?
Yeah, gold, I mean, is a series of bull flag chart patterns. This is a very nice looking chart pattern. It's almost too nice. A lot of times if they're too nice, they'll shake you out and fake you out. But overall, we've had a rally, we had a bull flag, we've had a rally, we've got a bull flag pattern. Gold's trading near all-time highs. I believe we're going to 2650, 2750 is the next stop. I've been talking about that for several months. These chart patterns are very strong. The monthly chart shows a very clear picture of, I think, where we are in these overall stages. I think if I was to just kind of zoom in and compare to the past, you and I covered this last time, is, gold in the early 2000s started a new super cycle, which I believe started in 2019. We saw a multi-year sideways consolidation. We've just had a multi-year sideways consolidation. Gold, silver, and miners rallied up as they saw the world and the music coming to an end for a recession coming and all that stuff. I think we got the exact same thing happening now. People are moving into it. I think a lot of smart money sees tough times ahead. And then, of course, we had the 2008 financial crisis, which mass selling and panic will pull pretty much most assets down. And I believe, we got some upside potential here in gold still to 2650, 2700. And then it might have some type of pullback and correction before starting this next, multi-year rally, this blow off phase where who knows how high it'll go, 3,500, 55. I mean, there's all kinds of people saying, even $25,000 gold. I'm not saying that. I'm just saying after this squeeze higher and some market correction, that is going to be the run where micro caps, miners are going to go absolutely ballistic. The key is, we're not there yet. So I'm pretty excited about it. I'm collecting physical. I have lots of physical metals. I'm not into any of the mining stocks yet. I think that's 2025, 2026, longer than most people want to hear, but that's could be the reality of it. So
Yeah, well, we would all welcome $5,500 gold. So as you already discussed, the physical gold is doing very well. The equity's not as well. Okay. And if you look at Newmont, which is the world's largest gold producer, it's finally coming alive. It was down on the year, but now it's up about 10% on the year. Well, what are your thoughts on Newmont here? And I know there's a lot of underlying issues associated with this company. They just acquired Newcrest earlier in the year, so they're still digesting that. But what are your thoughts on this start?
yeah, I mean, just looking like whenever I look at an asset class, I always like to zoom out. Like this goes back to the 80s, 70s even. I hate charts that go sideways and are really choppy. Like I don't like stuff like that. And it's not my thing. I would much rather pick a basket of stocks like GDX, GDXJ, SIL, or something like that. Take a basket versus being stuck with one company that could, be fairly have no real growth over a long period of time. I don't know much about the company. I mean, I don't follow individual stocks. I think miners as a whole, like if we take a look actually at GDX, I think miners are in that phase where they're about to start running higher. We've had this is a pretty messy chart, but we've had a major rounding bottom. It's moved up. It's built this giant launch pad. It's now got a series of higher lows, higher highs. I think we could see miners in general, which will mean Newmont will most likely move up. I think GDX could go to potentially $45 a share. So there's some good percentage upside. This is a basket of them. If you play an individual stock, it would be a lot more. They percentage wise, most likely. But I like miners. I like the space. I like silver a lot because silver is very explosive. Silver's already, I think silver's going 36, 34 to 38 is kind of that upper target. So I really like silver. It's built a very strong launch pad, and we know it can go ballistic. And we'll kind of see where that goes. In fact, I just picked up a big bar of silver this week, which is pretty crazy.
No, that's good. How large of a bar did you buy?
Check this out. I haven't even showed you yet. It makes me look really weak, but I got a 1,000-ounce bar of silver. And I mean, I have a few of these now. I have a friend who's moving countries. Whoa. And he can't take it with him. There's all kinds of problems bringing it across. And I'm like, I'll take it. So anyways, I love the silver bars. I wanted one for my wife and I years ago. So I bought one each. Now I need one more. So I have one for my daughter and one for my son.
Well, if nothing else, you can use it for a paperweight
Totally. Yep. Yeah. Break my desk.
or a doorstop.
Yeah. So yeah, funny story. I don't know if I told you this. So my father-in-law was a pilot for Air Canada for decades, and they had this wooden carton holding a door open in one of their rooms in Toronto Airport, and it was there for like 10 years. And one day the case broke open, and nobody knew what it was. It was just something that somebody stuck there, and there was a gold bar in there. It had been there for like 15 years or something like that, and they could not believe there was a gold bar, a massive gold bar, as the doorstop that they used. I guess it got lost in transit and it ended up there. It's just totally crazy that they're kicking around this. Who knows how much it was worth, but yeah, pretty wild. It is a doorstop.
That is wild. So no, you raise a very good point about buying ETFs because I don't think there's a tougher industry out there than mining. There's so many risks associated with operating a mine and so many complexities and people don't realize it. So the best way to eliminate or reduce that risk is buy an ETF or a basket of gold and silver miners.
Yeah.
So, okay. So we talked about Newmont. We talked about the silver stocks and the gold stocks. I got to ask you about Bitcoin, okay? Because a large part of our audience is looking at Bitcoin now.
Yep.
It's quite often referred to as new gold or digital gold. And it's been lagging. It topped out around 70,000. Then we had this whole halving process. And now there's been a lot of articles in the press just about this Mount Gox and whether or not they're selling off a large chunk of Bitcoin. But what are you seeing when you look at this chart?
Yeah, to me, this chart looks very strong. I mean, right now, the big question is this a bull flag pattern, or is it kind of a top starting to break down? And that's what we need to see. This feels and looks like a giant bull flag pattern, meaning it's pointing to higher pricing. We could measure this in a couple of ways. The most conservative play would be at this point, this shows us the upside target of about 103,000. If we were to go for the full potential move for Bitcoin, it does have potential to rally all the way up to about 113,000. So that is, I mean, there's some great upside potential in Bitcoin. This is the first time I've actually kind of been somewhat interested in Bitcoin, because it's gone through the phase where it's gone parabolic, it's blown everybody up and they've lost their shirts and it's come back from the dead. Now it's really trading and holding its value up at these highs. And I like this pattern. And I believe we're going into this major financial reset. And I think there's a reason, to move into Bitcoin more now than I think even in the past. So I do like this chart a lot. And it's something I kind of keep my eye on. If it starts to move and starts to potentially break higher, if it starts to show signs on the shorter term chart that's turning up, I might actually buy a Bitcoin ETF. I own some Bitcoin that I bought many, like a decade ago, back, and I just haven't done anything with it. Not quite a decade ago, maybe like 5 or 6 years ago. But overall, I mean, I like it. It's got upside potential. So yeah, the charts are pointing to higher pricing right now, big time.
And what about on the downside? Do you see a level where it's going to maybe start consolidating?
I mean, it should be finding support where it is right now. I'm just going to drop to the weekly chart, get a little bit more of a granular look here. And let me clean this chart up. Overall, to the downside, we could use a Fibonacci retracement. We could grab a couple levels of where it could retrace. And generally, the sweet spot is between the 38% retracement and 50% retracement. So this is the sweet spot that if it pulls back to this level, it has a lot of momentum to really break higher. Now, if it starts to get below here, below the 50%, you lose a lot of upside potential. It does quite a bit of damage. So it has tested support and it's finding it at this point. And that's all the pullback it needs to go. And it has had I think it's called a complex retracement, although it's not very complex in my mind. A complex retracement is a 3-wave pullback. 1, 2, 3. And what makes it supposedly complex is it breaks this low right over here. And so anybody who is in the market, there in Bitcoin says, if it breaks this low, get me out. And of course, it'll trigger that, flush those stops. I think I actually looked at this with members a week ago, 2 weeks ago, right when it was breaking. We drew a line from here. We looked at on the intraday chart, and to the tick, as soon as it broke that low, boom, huge volume, the stops got run, and then the market rebounded, washed the market out. So this is a good sign. This is what we want to see. We saw the stops get run. Now it's trying to stabilize. There's a lot of fear still. So people are accumulating here, and the buyers are sucking up those shares of people worried it's going to go down, and it's holding its ground. So I like the Bitcoin chart simply because it is doing this complex correction. We've seen the stops get run. It's holding its value. The long-term chart is bullish. So there's a good bullish case for Bitcoin at this point.
So that's a good overview of what's happening in the US and what your thoughts are there. Let's move into Canada now. And I want to take a look at the Toronto Stock Exchange, or the TSX. It's up 6% on the year. Let me say that again. It's up 6% on the year. Okay. So it's basically in line with the rate of inflation. What are your views on this? I mean, this is the thing about our market. It's always underperforming the US, right? And just to reiterate, the S&P's up 18% of the year. The TSX is only up 6%. What are your views? Is there any hope for the
Toronto Stock
TSX?
Exchange, it's a painful grind. I mean, it's resource heavy. Obviously, resources haven't done well for a very long time, so it's not helping. In terms of the chart pattern, I think we're in a time here where it's going to perform okay. I think we're going to see the resource stocks start to move up, and I think we could see this continue to push higher. I'm not a big fan of kind of a broadening formation, or it's called a megaphone, where volatility is getting bigger every swing. That means there's instability. It's generally not a good sign. We kind of had a similar kind of thing over here where you start to see these swings just broaden and it just gets really ugly. So I do think the Toronto Stock Exchange is going to have a squeeze higher, hit some new all-time highs. I don't think it's going to scream higher. I don't think there's a whole lot of upside potential left, but I do think it can go up. Yeah, and same with like you look at the venture capital exchange. I mean, there's just been no interest in this for a long time. And I was showing this the other day to a small investor, a micro cap investor. And, this was the big move we had where stocks went ballistic. There was another really nice run over here, and then of course we had a huge one back over here. And so we need to I think this is when the miners and uranium stocks are going to go ballistic, is when we see the venture capital kind of start a strong rally and start to move up. And I think this is the index we want to watch in terms of when do I get into miners and stuff like that. And they're just not in favor. Nobody wants the micro caps, the penny stocks. It's just a real struggle. But yeah, I think the Toronto Stock Exchange should bode well for a little bit here for potentially a couple of months as I think the resource stocks start to pop, and especially if energy stocks start to pop and break out, and gold, I think we can see this have a nice push to the upside.
Yeah, a big component of the TSX are the banks. And when you look at the banks, there's a real mix here in terms of performance. The Royal Bank is the best performing one. It's up 12% on the year. Scotia's flat on the year. BMO, TD are both down on the year. Why don't we pull up the Royal chart and give me your views on that?
I don't know what the Royal Bank chart is, to be honest. Let me, RBC?
RY is the
okay.
Yeah. But I bring this up because once again, we're hearing a lot of chatter, not only about the US going into a recession, but about Canada going into a recession. And our economy is a lot weaker than the US economy. Once again, when I had my discussion with David Rosenberg, he does not have a very high opinion of the Canadian economy, and he thinks we're going to see a big reset in the housing market here in the coming months. Is when people go to refinance their mortgages, it's going to be at a significantly higher rate, and that's going to put a massive burden on the Canadian consumer, and therefore this is going to spill over into the Canadian banks. And one thing we've seen in the last few quarters from all of the banks is that their loan loss provisions are going up.
Yeah.
So I'm curious to hear your thoughts on some of these Canadian banks.
Yeah, I mean, this opens up a whole new can of worms. There's a lot that's going into it. I think I think we're going to go into a massive housing correction. There's a lot going on in terms of the whole economy shifting gears. I mean, this is a 24-month moving average of the unemployment. Now, this isn't in Canada, but they're very similar. Every time we see unemployment rise above the 24-month, we go into a financial reset of some sort. We've got the US government is creating all kinds of jobs. They typically create all kinds of jobs just before things get really tough. They try to support the economy. We've got full-time job. We used to see people starting to get fewer hours. Now we're seeing full-time people just, you're fired, you're cut. We don't need you anymore because things are slowing. People are talking about the SP 500 has hit peak earnings. Sales forecasts are going down. I mean, we look at the excess savings in the United States, and I carry this across because the United States and Canada, I still believe, are very similar. What one does, the other more or less does as well. We went from excess savings after COVID, and now, we're in the hole, and people have burnt through their savings. And a big chunk of that is inflation is absolutely crushing everybody. Everything is expensive. Unemployment's going up, so more people are out of a job, and they're burning through their savings. So all this leads down to credit card debt is starting to skyrocket, or default, sorry. Eventually, then people can't pay their mortgages, and then this falls back onto RBC and all the banks and the regionals in the States, where all these banks now are holding all these mortgages and defaults, and they're going to go backwards. And I believe, we're going to see a big pullback in the housing market. IYR, which is the one of the US kind of REITs, I believe, we're going to see this pullback 50%. I think very similar to the 2008, we kind of have this consolidation. We have a big pullback after a blow-off phase. Well, we've had the blow-off phase with COVID. We've got this consolidation, and I believe we're going to have a big leg down. I think the housing market, it's already down 18 to 20% in my area from the February 22 highs. I think the market could fall, like regular home prices, not an ETF like this. I think home prices could fall another 20 to 30%. I think fairly easily. My town went from, I think it was about 60 to 80 homes for sale about a year and a half ago. Now there's over 600 and nothing's really moving and prices are coming down. We're down 20% in home values. So we don't even have any pain yet in the financial markets. It hasn't really even really kicked in.
No.
And as you mentioned, James, in Canada, there's the two most popular mortgages are 3%, 3-year and 5-year. This year is the 3-year. So we're seeing all these people now having to put their homes up because their mortgage is tripling in value and most people can't afford it because they always buy a house at their upper limit of what they can afford. And now it's triple that because of new higher rates. And then in 2 years from now, we got the 5 years coming up for renewal, which is even bigger. And to me, that is going to be the ultimate opportunity for any investor to be like, okay, there's going to be thousands of homes for sale. You get to pick the one you want, multifamily, garage, whatever you want, and you'll be able to pay a fair value for it. And it can be a great rental property, or you can upgrade your home. So housing market is going to be brutal. I think in Canada, it's going to get hit very hard. And it's a good thing for those who aren't overextended and who can take advantage of falling prices or at least avoid them. So that's kind of my take on, and the banks are going to be left holding the bag. And of course, the banks are always good until they're not. It's just like The Big Short. I watched that movie a week and a half ago and everything's good. Everything's good. Everybody covers it up. And then suddenly, boom, everything breaks. And so, JP Morgan, all these big banks are hitting new highs. But again, it's always good until the music stops. And then what happens, right? So
Well, here's another fun fact for you. Once again, why don't you put up that Royal Bank chart? Because when you look at that, it is very strong. It's the strongest of all the Canadian banks. To me, that doesn't look like it's pulling back anytime soon. But here's a fun fact for you. Toronto has the most cranes of any city in North America. Okay. In Q1 of this year, 221 cranes in the greater Toronto area. It topped out in Q1 of 22. There was 252. The second city with the most number of cranes is LA. They currently have 50 cranes. So 221 cranes in the greater Toronto area versus 50 in LA. And it gives you some idea of the building that's going on here. And I think probably an even bigger issue than housing or what's happening with these condos in the coming months and years. There's going to be a real reckoning.
Yeah, I saw headline news there on my Apple feed. They're talking about how Toronto condo sales have fallen 30% in June. Now, not in sales price, just the amount that are selling. They're not selling. The price is coming down because, man, there's gonna be thousands of units up for sale. And of course, everybody's building at the most expensive time to possibly build. It feels like, an epic bubble, and there's going to be a pretty big, I think, a reset.
Imagine if you're an investor and you bought a condo for $1 million, okay, in downtown Toronto. You were hoping to sell it out, and maybe you did for the first couple of years. Next thing you know, you got this major reset that's happening, a slowdown in the economy, and that condo that you paid $1 million for is now worth $750. Okay. Yeah. And so your monthly expenses, okay, you're making $3,000 or $4,000 a month in rent, but your expenses are $6,000 or $7,000. Like, people are just going to walk away. So here's the Royal Bank chart. It looks great. Why don't you put up the Scotia Bank chart as a comparison, because that's down 10% on the year.
And what's the symbol for that, James?
That is BNS.
All right. Scotia. I don't think I've ever looked at Scotia. I'm not a stock trader. Financials have never had my interest. This doesn't look the greatest. It's kind of got that megaphone pattern kind of unfolding here, which is generally not a good sign. And it's kind of right in the middle of the range. Like, so I'm not a fan of it. I definitely don't want to be holding any bank stocks, I think, when the momentum of the markets, the economy fully shift. And and it looks like it has a short-term bottom. This actually has a short-term kind of bottoming pattern where maybe it wants to push and move up a little bit. Now, this is the weekly chart. So I believe we only have a few more weeks potentially of higher pricing in the stock market. The fact that the market's been pushing higher, making new highs, and this is going the opposite direction is not a good sign. I mean, I wouldn't touch this at all myself. But overall, this kind of washout low and this rebound, this impulse move, which when you break one or two previous pivot highs, it's called an impulse move. It breaks through multiple levels of resistance. It actually broke through 3 or 4 levels. So that pullback technically can be bought once it starts to reverse. It's having a bounce today. So it might move back up to this $70 level and maybe consolidate, and then it might continue to go lower or so. But I'm not a fan of bottom picking and something that's completely going against what the market is doing. It's not a good sign.
So we also got to talk about the telcos, because if there's a couple of sectors that every Canadian owns, it's banks and it's telcos. And the largest one being BCE, you have that up. It's down 18% on the year. Its dividend is, I believe, 8 to 9%. But what's your take on this?
Yeah, Telecom has been it's been tough. I don't know that space very well, but just looking at this chart pattern, let me zoom out a little bit more. We could draw a line across these lows, and you can see this is somewhat of a pretty major top, and now it's broken below there. So there's quite a bit of downside potential. As I mentioned before, once we know a topping pattern, we can take the height of that topping pattern and you stack that below for where that breakdown zone is. So there's potential for this to just continue to free fall to 32.28, which will bring us into this somewhere right down into this kind of pivot low and this kind of breakout here. So there's quite a bit of downside. Even when we look in the States like IYZ, which is telecommunications, I mean, they've been going sideways for years, for a decade, and they're trying to find support here, and they have broken down as well. So definitely not a very good sector. Telecom, I don't know what that involves, but I mean, if everything's like, yeah, it's definitely a struggling industry. It's trying to find a bottom, but if this bottom breaks out, there's going to be another leg down, and BCE and the telecom space as a whole is going to get hit again.
Well, it's interesting to see this because, of course, interest rates are going lower. We already had one cut from the Bank of Canada, and so therefore you're no longer competing with GICs, for example, right? And like I said, BCE is paying a 9% dividend, and I'm surprised it's still under pressure. But what about TELUS? That's the second largest telco in Canada, letter T.
All right. Yeah, it's out of favor as well. I don't know. I don't follow the space, but I know there was a lot of talk about a US company coming in for telecom over the last couple of years, and how like I think we pay the highest rates in the world in Canada for cell phone service. It's ridiculous. And then I know there's talks of a big American company coming over, and it was going to be like $30 or $35 a month for our mobile phone packages versus like 100 and change. So I don't know if that is factored in, and people are like, well, we gotta, these stocks are coming down because they think there's a competitor coming in, going to sweep up everybody for with a better price. But they're definitely struggling and in a very clean downtrend. It's not something I mean, they probably pay huge dividends. I think these companies, if they're solid and after the financial reset, and this was my best play. This was my first major investment when I was much younger. This was like 2009. I moved into a Canadian ETF that was focused on dividends and utility stocks, and it was paying 16% dividend. And I held that for a year and a half. It doubled in price. Plus I got paid 20% in total kind of dividends. So companies like these, when the market gets beat up and we have a financial reset, if you've got dry gunpowder and you didn't lose your shirt as the market's corrected, moving into these type of stocks, they'll be paying some pretty massive dividends. Now, they'll probably also be cutting dividends because their sales will be down, but there's amazing opportunities when you've got a lot of cash sitting on the sidelines when a new bull market starts. Big dividends, lots of upside potential. I mean, it's across the board. You can buy businesses, equipment, stocks, you name it, real estate. It's just an opportunity. The problem is most people lose their shirts and are holding on for dear life during a recession because they don't exit and avoid it. They ride it down. So they know a lot of them will say, oh, this is an amazing opportunity if I only had money. And that's what separates investors from the average Joe, right? Like you need to be able to step aside, keep your gunpowder dry, and then fully take advantage of a market correction to buy into companies like these that are solid and pay massive dividends and Yeah.
So let's just summarize a lot of the points that you already made. In terms of the S&P, you see the S&P moving higher up to 5,800, possibly 6,200 in the next few months. And then we're going to get you think, a severe pullback. And you're very bullish on gold, very bullish on silver, very bullish on Bitcoin. And in terms of the Canadian market, you think it might grind higher, but no significant move on the upside. But yet the two largest sectors within the TSX are both financials and telcos. And depending on what name you look at, they're struggling. And we're both in agreement about the Canadian real estate market. It's going to be under pressure. Canadian consumers are going to be under duress. So that would tell me the TSX is going to be going lower, maybe a lot lower 12 months from now. How, as a Canadian investor, how should you prepare for this?
Really depends on what type of investor you are. Do you have an advisor? Do you manage your own money? I mean, if you, like, for example, if you hold real estate, I bought real estate several years ago. I built a lot of my real estate, so they're good for 40 years. They're good rental properties, multifamily. I don't plan on selling those, even though I know they're really high value. They're probably going to come down in value. They provide amazing cash flow, rock solid investment. I'm not looking to do that. People who have just recently bought a whole bunch of rental properties and they're expecting them to go up, those people are going to suffer, unfortunately, if they can't carry that debt. If things start to fall and they lose their jobs or businesses, or their business goes down in sales. In terms of the equities market, again, my whole strategy, which focuses around asset revesting, which is we invest in whatever asset is moving up. We don't hold anything going down. So right now we're invested in the stock market. Stocks are the best play right now. We're riding it up. When they fall out of favor and we start to go through a big recession, I think we'll probably move into we could move into bonds, TLT. I think bonds could be one of the most, it used to be one of our best investments. When we moved out of stocks, we used to have a strategy to play TLT, and it pretty much doubled our annual return. And we haven't played bonds since they've been out of favor with the rising interest rates, but that is coming to an end, and bonds are going to be, another gun that we've got to shoot off to grow our capital. So there's a lot of upside potential, I think, in moving to bonds. I wouldn't say right now. It's still bottom picking, but we're going to be moving into the US dollar index. I think there's good upside there. Once the stock market starts to sell off, I think bonds are going to be good. I think we'll eventually get into inverse ETFs when the stock market is bleeding out, week after week, and we're in an actual recession and bear market. We will get into inverse ETFs on the indexes. And the simple no-brainer, play for somebody who doesn't want to get into any trading, who's very passive, would be more or less when the market starts to roll over, which is what I focus on and share with people. I say, hey, now we want to be in or out of the market. You just move to cash. You move to something that pays you just an interest rate with no downside. You just collect interest and let the markets collapse. And then in a year after that, whenever everything's recleansed, you've got all your money plus the interest, and you plop it into all the investments that you want. So that the key is in knowing when to get out. And that's what most people don't know how to do. And that's what I focus on, is following trends, knowing when we should be in and when we need to get out and where we should put our capital.
I'm glad you mentioned the TLT because once again, I'm sure we both agree the Fed is behind the curve. And we saw this back in 2021 when they said that inflation was transitory. And then by early 2022, they woke up to the fact that it was a serious issue. And I think the same thing's going on now. And when they do start cutting, it's going to be probably too late. And therefore, the TLT could be a great investment.
Yeah, the Fed's always behind the ball, which is fine. I mean, that's just the way they are. So yeah, I think there's a lot of upside potential in the bond market over the next year and a half.
Well, Chris, that was a great overview, and thank you for spending time with us today. If somebody would like to learn more about you and your various services, where can they go?
Yeah, they can go to my website, which is thetechnicaltraders.com. And I've given you, James, a special link that if you click on James's link down below and you subscribe to my service to follow my ETF trades, I will send you a gold back. This is real gold, real bill, as kind of just a gift and a thank you. And it should go up in value as soon as you get it. So anyways, that's where they can follow me. And I cover the charts like you and I do on a very granular level. I zoom in and talk about it day to day. And you just copy the trades that I do. I don't dish out trades to give trades. I share the trades that I do. I put real money to work. That's the whole point, is to manage our risk, make a lot of money consistently, and profit from rising and falling markets.
And maybe you should have some sort of giveaway with that big silver bar that you showed me earlier. Why don't you show that again? Don't strain yourself.
I'd mail it, but it's too heavy. Yeah, it is a monster beast. 62 pounds and change.
Wow.
It's pretty cool. I've always wanted one. The second I bought the first one, I was just like, this is incredible. You see in the movies, they throw bars of gold around like it's nothing. I'm like, come on, guys. They're heavy.
Well, that's great. Once again, Chris, thank you.
All right. Thanks, James. Take care.